All right, perfect. Good morning, trade pros. Welcome to our morning market update for Tuesday, July the 31st of 2018. This is your last day to make July green. So load up on as much size as possible and go big or go home. I'm kidding. Don't do that. It's just one day. One day does not make a trader. You guys always remember that. Doesn't matter if it's the end of the month, but the month is ending. You get to close the book on July. I'm closing the book on my July with small gains, but a big wedding month. So, it worked out. It worked out very well. So August is coming up tomorrow officially. Today's the last day of July, and we are going to see a little bit of volatility around some repositioning maybe for funds. This past month has sort of been very bullish, actually, the month of July until the recent sell-off. So you could see some rebalancing for mutual funds, although it won't be major. It's not a quarterly end. It's not a quarter-end rebalance. It's just a month end. But there will be some volatility closer to the closing bell. All right, so today we have some earnings that we got to talk about. Caterpillar is down 2% as they bring up some fears of cyclical concerns to their business. Transocean, which is symbol RIG, is up 1% on a lighter than expected loss. So they're up. So there's only two companies that were really impacted by earnings. Let's get our passports out. Let's take a tour around the world, and we're going to end up in Japan. We're going to talk about Japan this morning and what the central bank did there, the Bank of Japan. We're going to look at that in depth because a lot of people understand it but don't really understand it. In Asia, Japan's flat, Hong Kong's down 0.5%, China's up 0.3%, and India's also up the same. So moderate or modest gains rather across the board in Asia, except Hong Kong, which is down quite a bit, 0.5%. In Europe, markets all turned green. London's up 0.7%, Paris is up 0.1%, Frankfurt's up 0.1%. So other than Paris, markets pretty much for the most part flat in Europe. Futures in the United States, Dow is up 0.1%, S&P's up 0.2%, Nasdaq's up 0.1% as well. Yesterday we had a really big sell-off driven by Nasdaq, and when we looked at the stocks, the FANG index was actually helping us trade Nasdaq very well yesterday, and I imagine the same will be true today. So look at FANG, Facebook, Apple, Amazon, Netflix, Google. Add them up and watch them as an index on TradingView. If you're confused about how to do that, we have a great video explaining it. I'll put the link in the description as soon as we're done this morning market update. All right. That's what we got. So watch FANG and trade well. Take care. Goodbye. Just kidding. Crude oil is down 0.6% this morning. Marky, how's the open on crude? Lower? Crude's selling off, hitting some sell stops to the downside. Gold's down 0.3%. Bitcoin's down almost 3%, back inside 7,000, but the upper 7,000s. And Bitcoin seems to be finding a little bit of resistance here. It's a consolidation, but I do see a breakout move higher at some point in the near future. All right, FOMC meetings begin today. Day one of the FOMC, day two is tomorrow, and then at 2 p.m. we have the FOMC statement according to that meeting. So that's going to be a very volatile opportunity for traders. 8:30 we had personal income and outlays came out as expected. Employment cost index also pretty much came out as expected. Wages are up 0.5%. So that's a bit of a positive. Slight bullish tone to that report. And then at 9 a.m. right now, we already had it. I just can't see it because I started the update. We had S&P's Case-Shiller Home Price Index. 9:45, we have Chicago PMI. That number used to move markets a lot. Not anymore, not as much, but still an important one. 10 a.m. consumer confidence. That's got the potential to move markets significantly if we miss or beat that number to a large extent. So watch out at 10 a.m. And then 10, we also have the State Street Investor Consumer Confidence Index and the official consumer confidence print. So 10 a.m. has some opportunity to have some news-based volatility in the market today. All right, let's talk about Japan. There was a lot of speculation that the BOJ, BOJ, Bank of Japan, I like to just call it the BOJ. I'm going to probably name my firstborn BOJ, or she's a girl, Baja. Yeah. Well, of course, we're going to have to run that by the wife. I just want to ask her, who is your Baja? Anywho, Bank of Japan there was speculation that they were going to be less accommodative or more hawkish, meaning they're going to finally remove their stimulus program to some extent, make some announcements at least on how they're going to do it, and give up the notion that they're going to hold these interest rates at a negative. Did you know Japanese official negative interest rate? Japanese official rate is actually negative at the moment. It still has been for a while. Did you also know that Japan started their monetary policy program in the mid-90s? And they're still not out of the woods. And that's a concern for the U.S. Fed as well. Anywho, Bank of Japan didn't really change much in their statement. They disappointed. So Bank of Japan Governor Kuroda tried to pull a Mario Draghi. from the ECB. Mario Draghi basically says he's going to be hawkish, but then finds a way to massage it just enough to be dovish, to be neutral. And Kuroda tried it, but failed. Here's the main changes here. First of all, the rates are maintained at negative 0.1%. That's the rates didn't change. However, he applied it to fewer bank reserves, which means fewer banks are exposed to that negative rate, which means more capital gets taken away from the Bank of Japan and circulates in the economy. So that's actually a withdrawal from stimulus, and that allows banks to circulate money more freely and is good for the market. So that's actually a change in their previous policy. So that's good for the economy. Here's where it gets interesting. He trimmed. There's something in the Bank of Japan called the yield curve control. So if you look at a yield curve, short maturity bonds to long maturity bonds over time, typically you get paid more interest. And by the way, guys, I think the video's flipped. So I don't know if this is going up or down, but it's going one direction. It should go up. So from one side, the lower maturity pay you a less interest rate, and the higher out you go, the higher the interest rate. This is called the yield curve. The Bank of Japan controls this. They call that the YCC policy tool, the yield curve control. And what they've technically done is they've allowed that yield curve to fluctuate by 0.2% versus 0.1% prior. So they pretty much doubled the leniency in which longer term bonds could fluctuate around the yield curve. And that might not sound like a big deal, but what they're essentially doing is saying we're slowly going to let go control of this and let the market price it. Now, 0.2% is not a massive fluctuation, but it's double what it was before. So there is some hawkish tone in there. Hawkish meaning higher interest rates over time and less accommodative with their cash to the market. So that's sort of where the volatility came into play. Here's some interesting things about Japan. Japan's latest GDP was actually negative on a quarterly basis for the first time since 2014. Their industrial production is also negative, first time since 2016. So they're seeing a turn in the economy to the downside. And whenever the economy turns to the downside, central banks tend to be more accommodative, which means dovish. They print more money, they lower interest rates. Japan doesn't have the flexibility to do that anymore. So the real news here out of this BOJ meeting was this, that they're starting to move towards a free market policy. They're starting to remove themselves from having their hands in the pot and allowing the market to kind of act on its own forces. That stance is called hawkish. This is the first time we've seen the Bank of Japan be hawkish in a long time. So yes, Kuroda failed in his experiment to try to excite the market to the hawkish state, but there's significant changes coming in the next couple meetings. So that was a real takeaway, this Bank of Japan press conference and monetary policy assessment last night. That happened around 10 to 1 a.m. 10 a.m. the numbers came out. Around 1 a.m. was the press conference. They're always tentative. They never give you a firm time. You need to know this because Japan's a huge buyer of U.S. Treasury, and Japan's also a big economy as well. So very important stuff happening here in the market. Because of all this, the Japanese yen traded lower against the U.S. dollar. The yen sold off. I think it's a disappointment. The yen expected more of a withdrawal from the Bank of Japan from the markets, more hawkish tone. They didn't get it, so it sold off. A lot of it was rumor. There's a saying in trading, buy the rumor, sell the news. A lot of it was rumor leading up to the actual press conference that they would do more. They would be a lot more hawkish. They'd be less accommodative. And then what Kuroda actually said was a disappointment, so it sold off based on that anticipation. However, I think ultimately this is positive for the yen. And, we'll see how it folds out. Depending on how the economy goes, Kuroda might have to get back to stimulating the economy or be more dovish. For now, he set the tone going forward. All right. Eurozone economy slowed further in the 3 months through June as well. Their annual GDP came out at 1.4%, and that's pretty different in a stark comparison to the 4.1 out of the U.S. that we saw a couple of days last week, actually on Friday. So we saw that, and Eurozone inflation rose by 2.1% this year in July, largely driven by energy prices. So there's an update out of the Eurozone as well. By the way, back to Japan. Japan lowered their inflation targets for the next 3 years, which is really interesting because if you would imagine a central bank saying we're going to raise rates, they need to have inflation edge up with their interest rate raises. Otherwise, it defeats the purpose. So the fact they've lowered their inflation outlook is a little worrisome to some traders and investors as well. So that's kind of what we got for you guys here. We focus mostly on Japan. This morning in the United States, we're going to look to try to sell rallies once again. It worked really well yesterday. Look to sell rallies. I'm seeing some more downside opportunity here in the S&P 500 and NASDAQ as well. Look at the FANG index for some indication. It's a really strong leader the last couple of days specifically. You got to follow that index. That's literally your compass right now, and you're on a ship in the middle of the ocean. How do you get home to shore? You follow the NASDAQ, but you follow FANG first. That's your compass. All right. The FANG stocks are your compass to guide you, and NASDAQ is your ship, if you will. And that's how you use these correlatory markets. I hope this has been helpful. You guys have a great day. If you want to join us, join our trading room. We trade together live every morning, Monday to Friday from 9 to 11. We're about to do that now. Usually after these morning market updates, I turn around, turn the camera off, Marky gets the lights, and we get started. That's what we're going to do now. You guys take care. I'll see you there. Have yourself a great day. Manage your risk. Trade like a trade pro. Thank you for tuning in. I'll see you tomorrow. Goodbye. Crude is down 40 cents already, says Mark. Dang, Mark, did you catch a short? It's all right. We will. We'll get a piece of action today, Marky.